Hey, good morning. Welcome to the morning brief. Today's Friday. Yes, thank goodness it's Friday, February 23rd. And news-wise, we got nothing. Nothing at all. You can see that everything is, here we have some euro numbers coming out at 9 a.m., but that's it. Nothing of interest. So that's a good thing because this market certainly doesn't need any exterior stimulus for sure. That being said, let's look at the daily chart. So we have gone crazy. We are now at all-time highs. We've broken out to new all-time highs. And you can see that I've drawn this trend line. We have been going up virtually nonstop since end of October. It truly defies gravity. That being said, it reminds me a ton. I actually sat and thought about this. And it really reminds me of the dot-com and the 2007, 2008 mess where the markets just went crazy, continued to go up, particularly the dot-com. If it had a dot-com in it, it was going to the moon. And valuations were out of control. And I specifically remember trading during that time. And, it was just really, really hard trading because you knew it was it was just overvalued. And it was waiting. And same in 2007, 2008, when the financial crisis, again, market had been up big before that. So, I don't know how much farther it's going to go. It seems out of control to me. It feels like it is breaking away from the fundamentals. But eventually the fundamentals will win. Fundamentals win over time. The question is how long does it take for the fundamentals to finally catch up? But so again, this is a great example of trade what you see in the moment. No bias, no opinion of whether the market's going up or down. Just trade the opportunities that present themselves. Where could we go? God, I have no idea. We're in uncharted territory, so let's just guesstimate maybe 51.65. The downside, the lows from yesterday would be somewhere around that 50.29 area. That's the best you can do is guess in this particular instance. Looking at the inventory. So inventory was up and price was up. However, they are not symmetrical by any stretch of the imagination. Here we only had about 8,100 contracts where you can see the price action was very strong, but inventory not so much. In fact, the inventory started retracing after 10 o'clock in the morning. So even though this continued to go up, the inventory was going down. So even though we have day over day confluence here and correlation, we definitely do not in intraday. After 10 o'clock, we went down in inventory as price continued to go up. So that's a divergence. So starting to see some red flags coming up, but we've had red flags before and the market keeps going up. So my advice is to be very, very careful. Keep your stops tight and only trade what you see, not what you think, because what we think most of the time is wrong. Intraday here, where our intraday support and resistance, we've got some at 51.20 for resistance. And you can see that once we get above 51.20, there is nothing up there. I'll have to redraw some fib extensions and see if we can find some levels up higher. 51.40, 51.57, and 51.81 would be potential resistance. Support, on the other hand, we do have a little bit of confluence around the 50.93, just below the 5100, so 50.77. And drop down all the way down below 50.50 to 50.38 as support. That's all I've got for you today. A wicked, ugly week, in my opinion. You got to trade what you see. Stop thinking about what it should be doing and trade what it is doing. We'll see you on Monday. Have a great weekend. Remember to subscribe, comment, and like. Hey, thanks for watching the Morning Brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.